Everybody has their own trading system or model, but the thing that most people struggle with is that they can't determine inside of their model what makes a setup an A plus setup, or what makes a setup a B plus setup, or even a C setup. Which setups should you avoid taking? Which setups should you up your size on? Which setups you should have a bigger or smaller stop loss on? All these things are key and crucial to understanding your model and mastering it fully. Even if you're trading a completely different system from mine, a lot of the components that I'm going to be covering in this video will reveal to you how you can determine an A plus setup in your model. Because the things that I'm going to be covering in this video are universal to every model. It's not about what concepts you're using, what model you're trading, or who you learned from. It's about identifying what makes an A plus setup and what makes a C setup. So without further ado, let me hop into the video. My name is Marky. I upload 2 times per week on this channel. These are trading educational videos, and I try to make them as high quality as possible for you guys. So if you enjoy the videos, please drop a comment below of what you learned, what you want to see from me going forward, and show some love. Let's get straight into the video. Overtrading is one of the biggest problems that traders have, and most of the time it doesn't happen because of your emotions like you might think. It actually just happens because you have a model and you don't know how to separate it from an A plus setup and from a bad setup that you shouldn't be trading. Even though your model shows up, it might be in bad conditions, or it might not be the right time yet for you to execute this trade. So I'm going to give you 5 ways to grade your setups. These 5 things are questions that you should ask yourself before you actually enter the trade. And these questions are going to completely change the way that you trade, because it's really going to help you determine whether you should be placing this trade in the first place or whether you should wait until it's a higher quality setup. Remember, this is a business. There's also money in this business. So it's not just taking an exam that you don't care about and getting an F. These grades are going to determine how much money you're walking away from the market with every single day. So I recommend you take your grades seriously. I'm going to be grading your setups. At the end of this video, I want you to join the Telegram that's linked in the captions and comment under one of my posts a screenshot of your trades. I will personally be grading your setups and letting you know whether it was an A plus setup or whether it was a poor setup that you shouldn't have taken. So treat me like your teacher on this one, because I'm going to teach you exactly what makes your setup a bad grade setup. First most important factor is premium and discount. Is your setup in the premium or discount of the move, depending on whether you're buying or whether you're selling? So let me show you an example of what that means. So right here, let's imagine we have a little swing high right here, and here is our swing high from the bottom to the high of this swing move, and price starts pulling back. Are you going to be buying in the premium of this move, or are you going to wait for it to pull down into the discount? And the reason why this is one of the most important factors, and the first one that I'm starting off with, is because the question that you're going to ask yourself is there something lower that the market wants to fill before going higher? And this is instantly going to be the make or break between whether a setup is an A plus setup or not. Because if you're trying to enter right here, for example, off of a gap that got respected, and there's a gap right here that has yet to be filled, then this is already not going to be an A plus setup, because there's the slight chance, even if the market is extremely bullish, there's a slight chance that it pulls lower before going higher. Now, however, if the market does run down into this gap and then starts pulling higher, there's no more gaps lower than this to fill up. And then you can determine that this setup is an A plus setup, because it's already at the lowest in the discount. It already filled the lowest thing that it could have possibly filled, and now it can start running, and that would be an A plus setup that has nothing lower to fill. Now, you're probably wondering, what does it mean to fill something before going higher? I typically trade from gaps, and if you're learning from me, you will also be trading from gaps. These gaps are inefficiencies, and the market comes to fill them up. Another thing, just excluding the premium and discount, let's forget that for now. If you're trading from a gap, there's an idea that these gaps are like magnets. So if you're trading from a gap, you see the gap respected, it didn't fill up the gap completely and starts running higher. You can take this trade, okay? So when should you know to take the trade or not? If it's trading from a gap, it can run higher from the gap. But is that an A plus setup? I'd say no. If there's a certain amount of the gap that has yet to be filled up, then this is not going to be an A plus setup, because once again, there's a chance that it's going to come back lower and fill that up. Now, I'm not going to give that a B grade setup, because it's still using a gap. You still waited for it to come into a gap. Maybe this gap is in the discount, and that's still pretty good. But if there's a slight room for it to fill, you're already not going to be at an A plus grade. And the reason why is because there's still room, there's still a chance that it comes lower before going higher. Your narrative can be completely correct, and it's still going to take you out before going higher, because there was a slight gap that was left unfilled inside of this gap that you were trading from. So that's not going to be an A plus setup. The second factor is going to be risk to reward, and it goes hand in hand with premium and discount. If you're trying to catch a buy setup from the premium, then your risk to reward is going to be worse than if you were to trade from the discount. But risk to reward is one of those things that's also going to instantly tell you whether your setup is an A plus or whether it's an A or B setup. Because if you're trading from here, just consider your risk to reward. If you're trading from here and you determine that there's a gap below here, so it might run higher, but your stop loss, you still want to put it below the gap that's down here. So let's imagine there's a gap down here and you want to still factor it in. If you're taking the trade from here, your risk to reward is already going to be worse than if you were to wait here, have that same stop loss right from the gap, and target there. You're already giving yourself a 3 to risk to reward instead of a 1 to 1 risk to reward. And that's already going to give you a higher probability of being profitable because your wins are going to be bigger than your losses. In the case that your bias is incorrect and you do take a loss, you don't want to take a big loss. You want to have tight losses, you want to have big wins. So make sure that you're using premium and discount, or learn how to better place your stop loss. Because one of those things is that you don't actually have to factor in for this entire area. You already know, like say there's a swing low right here and market starts pushing back up. You already know that if it runs down below this low, it's likely pushing down to get to this gap, right? So why would you put your stop loss all the way down here and be in drawdown? You can take the loss right here at this low with a tight stop loss, and then once again, if it gets down there, you have another tight stop loss trade. That would be the same thing as if it ran down through this gap and took out your stop loss. You'd lose the same amount as those two losses, but you'd be able to protect yourself and reevaluate whether your bias is correct if you were to have a tighter stop loss right here. So use risk to reward. Use risk to reward to determine how big your stop loss should be. And once again, this goes hand in hand with premium and discount. Premium and discount is going to 100% show you whether your risk to reward is going to be good or bad based on where you want to place your stop loss to protect your trade. And have a tight stop loss. If it runs on your stop loss, you already know that it's likely going to run to the next gap lower. That's how I determine where to place my stop loss, and it protects me while giving me a great risk to reward. The third thing is going to be higher time frame context, so market structure and context. This one's different from the last two that we covered because it's not just going to be a matter of are you getting in at the premium, are you getting in at the discount, and how big is your stop loss. This is whether you're going with the trend or against the trend. And you guys know gold, for example. Gold is a constant buy side pair. So already taking sells is going to lower your accuracy. It's going to lower the grade of your setup because sells are typically going to take a little bit longer to play out. They're going to consolidate more versus buys. Once they hit, they're going to hit hard. So if you've been holding sells for a while, they can go away within one big 30-minute candle. And so you have to kind of understand if you're trading counter trend, that's already going to lower your accuracy. It's going to lower the win rate. It's going to lower the grade of your setup. So one of the things with market structure and context is that you have to make sure that, especially if you're scalping, that you have that like narrative, you have the targets. So let's say you're scalping inside of a move like this. Gold's moving and it finally creates a swing high. Market starts pulling down a little bit and you have a gap down here that you want to aim for. You can enter, say, off of a gap right here to target the discount of gold, right? The discount of this move before going higher. You want to make sure that if you're selling, if you're trading against the trend, in order for it to be an A plus setup, you have to have a great target. Like yesterday, let me try to find it on my chart. Yesterday we took sells inside of Asia session because the daily candle did not have a wick. So let's wait for this new daily candle to open real quick. I don't think I have the indicator right now. Higher time frame power of 3. So here's what the daily candle looked like, and we had no wick. So during Asia session, when we ran up and tapped into a pretty high time frame, I think it was the 1 hour. We had a 1 hour gap like this. We had an inversion from here. So I had a confluence for it to run down, right? So during Asia session on the 30-minute time frame, I noticed that we had no wick. That was a great target of mine. So even though I was counter trend trading, where we get like a huge amount of buy side, I'm counter trend trading. I'm selling in a very bullish pair. So I have to make sure that once it hits the target, I'm closing my position. So when it comes to market structure and context, if you're trading against the trend, you want to make sure you exit when you hit the target. And it's kind of like common sense, but in reality, a lot of you guys forget that the overarching bias on one of the pairs that you're trading is going to be bullish. So if you don't end up closing your trade right here because you try to hold it in the long run, then it's obviously going to go against you. It's going to take you out of the position because gold is overall bullish. So even though you had a huge move and you wish that you could have just kept holding it for sell side, gold is bullish. So when you catch buys, then you can hold them a little bit more long term. But for sells, you have to be careful. You want to make sure that wherever your target is at, that's when you're closing your position, looking for the next counter trend scalp, like this one right here during London session, where we got yet another beautiful wick back down, came down below the open before expanding higher again. So just make sure that if you're counter trend trading, you want to pay attention to the market structure context and make sure that you are very good with your targets. Price action will deliver. It will get to the target. You just want to make sure that you're not holding more than what the target is giving you if you're counter trend trading. That's going to lower your grade on the setup. It's A+ if you're holding a trade, you close partials and you hold the trade with the trend. It's a B setup or B- setup if you held your trade to your profit, you took partials, and you're trying to hold the position counter trend. Make sure that you're only holding to your target and then close the full position before you either turn around and go long or just be done for the day. Look for the next counter trend trade and then you can sell, then you can close it again. Do not hold a counter trend trade if you've already hit your daily target. The fourth thing is the strength of levels, and this is going to be more oriented towards your model, your specific model, but like for me, I kind of have to understand, and this goes more hand in hand with the market structure and context and premium and discount, because each confluence has a certain level of strength. Some of them are going to be stronger than others, and how you can determine if it's a strong confluence is first of all checking, is it in the discount if you're bullish? So on gold, we're bullish. If it's in the discount, it's going to be stronger than a bullish for value gap that's in the premium. You can see this one's in the premium. It tapped into it, ran up a little bit, and melted. Why? Because there's one in the discount. This one's going to be stronger. This one's also inside of a daily gap. So this 30-minute gap inside of the daily gap is going to be extra strong because there's multiple levels of confluences that are supporting the narrative that price is going to go higher. So you also see it start respecting it. You can be like, okay, I'm going to go long off this one because I see it getting respected. It has a daily confluence. It's the right time during New York. We have a 30-minute confluence that's being respected over and over again. This is a very strong level. It's not going to be strong if it's in the premium. It's not going to be strong if you're trying to trade a bearish gap when the market is trying to go higher. Instead, it's going to run through this gap and use it to go higher. So this is also going to be a weak one because it's a counter trend gap. You have to make sure that if you're using a higher time frame gap, that the higher time frame narrative is to go down. Because if you're trading from a 30-minute gap expecting price to go down, it has to go down within the next hour or 30 minutes for you to actually take a profitable trade from this gap. If within the next hour or two it actually wants to go higher, it's going to disrespect this gap. So according to your model, make sure that you align it with market structure and context and premium and discount to determine the strength of levels. So each confluence has its own strength depending on the context around it. Some are stronger and will be respected. Others will not be respected. That's what you have to consider, and you have to ask yourself, is this a strong confluence? Am I taking a buy from a premium gap when there's going to be a gap that's a little bit lower under a liquidity sweep? Like this one just had so much more qualities to it that make it an A+ setup. Okay, now the last thing isn't going to make much sense to you guys because it's discipline and plan. How do you expect to grade your setup with discipline and plan? Like how can you determine, oh, I'm not a disciplined person, so my setup's now a B setup? That's not what I mean. What I mean by this is that if you don't have discipline, you're going to overtrade. The more that you've attempted the same bias and have taken a loss, like say the second time, it's already going from an A+ to an A setup. The third time, it's a B setup. The fourth time, it's a C setup. Because your discipline is going to highly reflect on how well you perform in the market. And if you don't have a plan, your setup's already going down. If you don't have a plan of like, hey, I'm taking 2 trades in this direction. If I take a loss on both of those trades, then I'm done. If I win the trade, then I'll keep going in this direction 2 more times. If I take 2 losses in a row, I'm done. This direction is probably incorrect. I'm going to take a step back and reevaluate it. So make sure that you have a solid discipline and plan around your trade. So it goes from A plus to A if you have taken a loss in the same direction that you were aiming for and you try to enter again. Now it's in the premium. You try to enter again. You take another loss in the premium. That's how you know that your narrative is probably going to be incorrect, and at that point you can drop the grade of the setup. And if you drop the grade of the setup, you have to also make sure that what you're doing is you're dropping your risk and you're either tightening your stop loss or you're giving yourself more room with the less risk that you're using on the trade. Now that's it to this video. I hope you guys learned a lot about what actually involves grading your setups, and I really highly encourage you guys to incorporate this in your strategy. So don't forget, grade each and every single one of your setups. Make sure that you're evaluating whether it's an A plus setup and you can actually do a tight stop loss with a big lot size, or whether you should scale down because it's not a high quality setup and you should lower your risk, also do a tight stop loss, maybe take the loss, wait for it to dip into the discount, and then you can go in again with another tight stop loss, aiming for that target that you were aiming for. Make sure you come in with a good amount of discipline and a plan for every single day. This is a business and there's money in this business. If you don't perform well, if you don't grade your setups, you're not going to make money in the long run. Please drop a comment if you learned something new, and I'll see you guys in the next video.